Welcome back. I'm Alexander, and today's episode we're talking about something that will affect literally every person who earns a paycheck or runs a business in America. We're talking about why you're probably paying more in taxes than you actually have to. Okay? Now, I want to be upfront with you right from the start. This isn't about anything shady. There's no gray areas. We're talking about completely legally strategies that are written into the tax code, strategies the IRS says you're entitled to use. The problem is most people never learn about them, and the ones that do learn too late. So let's fix that today. Here's the truth. The U.S. tax code is over 70,000 pages long. Not even tax professionals know every single word of it. But buried inside those pages are hundreds of deductions, credit strategies that are designed to reduce how much you owe. The people who actually use them pay significantly less than the people who don't even know they exist, okay? Let's put it this way. Imagine two people earning $75,000 a year. One of them just files a simple return with the standard deductions and call it a day. The other one takes the time to understand that what they're entitled to. They contribute to an IRA account. They track a few key deductions. Maybe they have a side business or some rental income. That second person could end up paying thousands less in taxes every year. Okay? Same income, wildly different tax bills. So the first thing I want you to understand is this. The tax system is not designed to be simple. It's designed to reward people who are informed. And that's exactly what this series is here to do, is to inform you. Okay? Let's talk about the three biggest reasons people overpay. Reason number one, they take the standard deductions without checking if itemizing would save them more money. The standard deduction is a flat amount the IRS lets everyone take. It's simple, it's easy, and for some people, it's really the right move. But for others, especially homeowners, people with significant charitable givings or high medical expenses, itemizing their deductions would actually put more money back in their pocket, okay? A lot of people never even run the comparison, okay? Reason number two, they're not using tax advantage accounts, things like 401ks, IRAs, HSAs, and FSAs are not just saving tools, they're tax tools. When you contribute to a traditional 401k, that money comes out of your paycheck before taxes are calculated. That means you're reducing your taxable income dollar for dollar. So if you're in the 22% tax bracket, you put $5,000 in 401k, you just saved $1,100 in taxes, just like that. And yet millions of Americans are leaving that money on the table or giving it back to Uncle Sam, paying it in taxes. Reason number three, they're not tracking deductible expenses throughout the year. This one hits especially hard for freelancers and self-employed folks, or somebody that has a side hustle. If you work from home, if you drive for your business, if you pay for professional development, all of that can potentially reduce your taxable income, but you have to track it. Nobody's going to track it for you. And if you don't have the receipts and the records, you can't claim it. Now, I want to make this real for a couple of different situations. Okay? If you're a W-2 employee, meaning you get regular paychecks and your employer withhold taxes, your biggest leverage is your retirement contributions. Any pre-tax benefits your employer offers, maximize those. Even bumping up your 401k contributions by 2 or 3% can shave hundreds of dollars off your tax bill each year. If you're self-employed or freelancing, the situation is actually more powerful because you have more control. You can deduct business expenses, set up a SEP IRA or a solo 401k, and potentially deduct a portion of your home if you have a dedicated workspace. The key is treating your business like a business, keeping records, tracking expenses, and working with someone who understands self-employment tax. Self-employment tax. Here's the bottom line. For this episode, the biggest reason people overpay is simply not knowing. Not knowing that they're entitled to, not knowing how to track it, and not making tax planning part of their regular financial planning routine. Okay, so over the next 6 episodes, we're going to go deep on every major strategy. Deductions most people miss, tax strategies for freelancers, real estate tax advantages, investment strategies, and how to build a year-round tax plan that actually works. Okay? Not just something you think about in April when it's too late. So stick around for the whole series. I promise you it'll be worth every minute. We'll put out one every week. Also, we just added the client library to our website. It's in our menu. Under resources, we have tax, accounting topics, articles, white papers, educational videos, and we have a monthly financial and tax newsletter. That's free. Be sure to check that out. If you miss any portions of our video, please go to my website. And on the homepage, you'll see a button that says, you'll see the YouTube symbol, and just press on that. Okay? Be blessed. See you soon.